Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Suburban Propane Partners L.P. quarterly report. Suburban Propane Partners L.P. offers a diverse range of businesses and services to its customers across the United States. The company's primary focus is on the retail marketing and distribution of various fuels, including propane, renewable natural gas, fuel oil, and refined fuels. The company operates through four main segments: propane, fuel oil and refined fuels, natural gas and electricity, and all other. In the propane segment, Suburban Propane provides propane for residential and commercial use, as well as industrial applications such as motor fuel, cutting gas, and agricultural uses like tobacco curing and crop drying. The company also engages in the wholesale distribution of propane to industrial end users. Additionally, its fuel oil and refined fuels segment offers retail distribution of fuel oil, diesel, kerosene, and gasoline for residential and commercial use. Furthermore, Suburban Propane markets natural gas and electricity to residential and commercial customers in deregulated energy markets through its natural gas and electricity segment. The company's all other segment provides a range of home comfort equipment, including whole house heating products, air cleaners, humidifiers, and space heaters. Overall, Suburban Propane Partners L.P. offers a comprehensive suite of businesses and services to meet the diverse needs of residential, commercial, industrial, and agricultural customers across the United States. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stock price of Suburban Propane Partners L.P. has remained relatively unchanged in the past year due to various market and economic factors. One possible reason is the lack of significant growth or innovation within the company itself. If the company's revenue, profits, or overall performance have not improved substantially, investors may be hesitant to buy into the stock, leading to a stagnant price. Another factor that could contribute to a stable but unchanging stock price is market sentiment. If there are no major changes in the industry or economy that would impact the company's prospects, investor enthusiasm and confidence may remain steady, resulting in little movement in the stock price. Additionally, external factors such as regulatory changes, competition, or global events can also influence a company's stock performance. In some cases, a stable but unchanging stock price can be a sign of a well-established company with a strong track record of stability and reliability. Investors may view the company as a safe haven for their investments, leading to steady demand for the stock without significant price fluctuations. However, this does not necessarily mean that the company is immune to future changes or challenges. Ultimately, the reasons behind a stagnant stock price can be complex and multifaceted. It requires careful analysis of various market and economic factors to understand the underlying causes. Suburban Propane Partners L.P. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $5 billion. Suburban Propane Partners L.P. trades at a lower price-to-earnings ratio of 10 times and a higher price-to-book ratio of 2.17 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 74% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 6.58%. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth or decline can be identified through an analysis of various factors that impact a company's revenue streams. Revenue growth is primarily driven by increased demand for propane due to warmer winter weather and higher sales volumes in the Northeast region. Additionally, investments in renewable energy through Suburban Renewable Energy have contributed to growth. The expansion into natural gas and electricity marketing in deregulated markets has also been a significant factor. Furthermore, residential revenue has seen an increase of 3.34% from 2024 to 2025, with the propane segment contributing the majority of the partnership's revenue. On the other hand, revenue decline is primarily attributed to decreased demand for fuel oil due to mild winter weather and lower sales volumes in the Midwest region. The decrease in wholesale revenue by $10,130, minus 71.43%, from 2024 to 2025 has also contributed to the decline. Furthermore, average fuel oil and refined fuel selling prices have decreased by 1%, resulting in a $0.2 million decrease in revenues. Overall, the drivers of revenue growth or decline are largely influenced by changes in demand for various energy products, regional sales volumes, and investments in renewable energy. The net income of a company underwent significant changes between two periods. Initially, it stood at $19,420, but increased to $45,780, indicating a substantial growth of 135%. However, this increase did not translate into higher profit margins. In fact, the profit margins decreased from 5.2% to 12.3%. The decrease in profit margins can be attributed to various factors. One reason is that operating income only increased by 14%, which does not directly contribute to a change in profit margins. Furthermore, the company experienced seasonality, with higher sales and operating profits concentrated in the first two fiscal quarters. Additionally, other factors contributed to the increase in net income. A decrease in average posted propane prices led to lower costs for the company. Increased inventory levels also resulted in lower commodity prices, further contributing to the growth in net income. These factors combined to drive up the net income, but ultimately did not lead to a corresponding increase in profit margins. The company's financial performance indicates a lack of positive operating cash flow. According to the provided information, the operating cash flow is reported as a negative number, specifically $4,118 on page 10. This suggests that the company is experiencing difficulties in generating sufficient cash from its operations to meet its expenses and obligations. As a result, it appears that the company is not currently generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the current debt level saw a substantial increase of plus $71,858 from September 27, 2025 to December 27, 2025. However, this was followed by a decrease in long-term borrowings by minus $700,000 on page 16. On page 18, it is reported that total debt has decreased from $1,211,745 to $1,322,505, which seems contradictory to the initial increase mentioned earlier. Nevertheless, further analysis reveals that total long-term debt increased from $1,323.3 million to $1,345.2 million on page 36. Regarding interest expenses, there is a mixed picture. On page 2, it is stated that interest expense net increased by plus $144, 0.7% increase, in 2025 compared to 2024. However, on page 27, it is reported that interest expense net decreased by minus 0.3% from December 28, 2024 to December 27, 2025. The net interest expense of $19.8 million increased $0.1 million, or 0.7%, compared to the prior year first quarter on page 34. Overall, while there are some discrepancies in the data, it appears that the company's debt level and interest expenses have undergone significant changes over the past year. Management is optimistic about the company's outlook and strategy, emphasizing a focus on renewable energy to reduce carbon footprint and navigate the changing energy landscape. The partnership has made significant investments in renewable fuel projects, diversified its business model, and acquired assets in RNG production and propane operations. Key initiatives include strategic growth through investments in Independence Hydrogen and Oberon Fuels, as well as the acquisition of propane assets and retailers in California. Management aims to position Suburban Propane for sustainable, long-term growth by investing in lower-carbon renewable energy alternatives. Financially, the company is focused on redeeming and refinancing debt, with a strong liquidity position and net cash provided by financing activities of $88.8 million in the first quarter of fiscal 2026. Management also engages in hedging and risk management activities to mitigate risks related to weather conditions and price volatility. Concerns about inventory buildup and supply chain disruption exist. There are valid concerns regarding the accumulation of excess inventory and potential disruptions in the supply chain. A review of relevant pages highlights these issues. On page 28, it is explicitly stated that there are indeed concerns about inventory buildup. Furthermore, on page 35, another warning sign is noted. Potential inventory buildup or supply chain disruption due to net cash used in operating activities and investing activities. This indicates a possible strain on the company's resources, which could exacerbate existing issues with inventory management and supply chain efficiency. That concludes the financial summary for Suburban Propane Partners L.P. Feel free to comment below, and I will be happy to answer them when possible.